All right, we are live. Thank you to everyone who is tuning in. I am Danielle Patterson, CEO of Family Office List, and very excited for today's presentation. We will be talking about the art and science of investor prospecting and really focusing on how to raise capital more effectively. So I'm going to give everyone a few minutes. I see lots of people trickling in here. So for those of you that are on time and ready, I invite you, drop an introduction in the chat. Let us know where you're joining us from. And we'll get started here in just a moment. All right, fantastic. Well, thank you everyone for joining us today. Again, I'm Danielle Patterson, CEO of Family Office List, and I'm really excited for today's session on the art and science of investor prospecting. We have two incredible experts with us, Eva Dobrzanska, Managing Director of Fundraising Playbooks. She is an expert in behavioral science-backed investor outreach. Going to be teaching us some incredible techniques. And joining her, we also have Nathan Beckord, CEO of Foundersuite Fundingstack. And he is our specialist in investor pipeline optimization and fundraising technology. Hi, guys. Thank you so much for being here today.
Thank you for having me.
Thank you, Danielle.
Yeah, so to kick things off, Eva, can you just introduce yourself to the audience and tell us a little bit more about what you do at Fundraising Playbooks?
Absolutely. So what I do is exactly what the company name suggests. It is the right strategies and playbooks for how to reach any investor anywhere in the world, regardless of whether you have a warm network to warmly introduce you or not.
Awesome. So valuable. Can't wait for everything we're going to learn from you today. And Nathan, I'll kick things over to you. Can you introduce yourself and tell us a little bit about what you do at Foundersuite Fundingstack?
Yeah, thanks. So I have two platforms. I've been raising capital my whole life since college, basically, which was a long time ago. And that has evolved into going from investment banking into consulting into running two platforms. So we have Foundersuite.com, which is for startups raising capital. That's been around 9 years, if you can believe it. And we've had 100,000 startups use it to raise 21 billion. And then about a year ago, we launched Fundingstack.com for emerging manager VCs and funding advisors. And that is kind of our enterprise version of our fundraising platform. So Foundersuite and Fundingstack, it's fun.
Amazing. Well, I'm so excited to learn from both of you. You have such incredible experience and expertise. I know the audience has really been looking forward to this session as well. To kick things off, I thought we'd just kind of start with the basics, you know, the foundations of investor outreach. And so I'll start with you, Eva. Just kind of share with us, why do you think most investor emails go unanswered? And what are some of the common mistakes you see founders or fund managers making when they go to reach out?
Yes, absolutely. I think if I was to distill everything that I've seen across, the dozens of clients that I've worked with, is that the biggest mistake is when in the first email you play all of your cards at once and you give too much and you include too much information, go straight into wanting to close the deal too fast, especially if it's a cold email, it in a way that the first cold email, its goal be to generate an opening. You're just setting the tone, you're just introducing yourself, you are just showing lines of alignment between you and that investor. Just to put you only in the course of following up, I would say follow-up, or in the third follow-up, that's when you can include your pitch deck. So I never advise founders to include pitch decks in the first outreach emails if it's cold and if you're just trying to establish relationship, because the moment you've attached your pitch deck, you've played all of your cards and you're leaving the door wide open for that investor to say, I took a look, not one for us, but thank you. So that's important, spacing it out.
So good. I love analogies, and that's like the card card deck analogy is amazing. It's also like dating, right? It's, you got to date before you marry someone. So love those analogies. And Nathan, from you, how do fundraisers ensure that they're targeting the right investors even before they even think about reaching out?
Yeah, it's the $1 million question. I love that question. Fundraising is a sales process. This is something I say like 5 times a day, 7 days a week. And you want to be selling your product, which is your company, to people who are interested in buying that type of company, right? And a lot of founders don't make, and that sounds obvious, right? But a lot of founders don't kind of connect the dots of what that really means. You
Right.
really want to be finding investors that are looking for your type of deal, meaning your industry, your stage, your geographic location, in some cases, your momentum, your traction level where you're at. And when you do that, when you identify investors who are looking for that specific deal, it's a very easy sales process. But when you try and mass spray and pray investors that may or may not invest in your type of deal, you get nowhere, or your email gets flagged, and now you're in trouble with Google, right?
Yeah.
It becomes much worse. So to answer the question more succinctly, spending the time researching and targeting people who are looking to buy what you're selling is really the name of the game.
It's key. It's just as much. It's like no one wants to waste time, but respectfully of the person you're reaching out to, we really don't want to waste their time either. So yeah, thinking about and end result and finding that alignment is so important.
Let me add one tiny bit to that. I did not make this up, but I love this quote. Fundraising, I think this came from our podcast a long time ago. Fundraising is not about convincing people of what you're doing. It's about finding believers. In other words, finding people who already have kind of the thesis of your vision, your mind share. And it's simply finding believers, not convincing. And, so I love that quote.
I love that so much. Well, we've got a great relevant audience question. And I mean, really, either of you are welcome. Yohei, I hope I haven't mispronounced your name, but I use a one-pager instead of a deck. What should and shouldn't be there? Eva, you want to take a stab at this?
Yeah. I like that one. I see this as one of the many micro interactions that you want to accumulate with an investor. So when it comes to sharing a deck or a one pager or a two pager, if you'd like, I would do this by means of a follow-up number 2 or a follow-up number 3, even on the potential investor target. And when it comes to what you should include on there is your strongest traction metrics, the go-to-market strategy that you are pursuing, and what I like to add to both pitch decks and to one pagers, specific lines of alignment between you and that investor. So I use an ideal investor target methodology that I've developed in my work with clients. And one of the strongest signals on line of alignment that you can have between you and investor, in my opinion, is when what you do aligns strategically with the strategic goals of their LPs, of their investors. And if you can showcase that, how by investing in you, that investor would fulfill their own responsibilities to their investors, that's a game changer. The moment you put that on your one deck, one pager, on the very top, that's how you get the meaning.
It's like hyper personalized and show me you know me. It's you've done your diligence.
Mm-hmm.
Nathan, anything to add to that? Such great advice, Eva.
No, not really. I like the one pager. I mean, it's funny because back in the olden days, like in the 2000s, I was working with startups, and it was very different. You would first write a business plan, right? I mean, how many people, if I did an audience poll, how many people have written a business plan? I bet it'd be almost none. But we used to write a business plan, which would be like this 20, 30-page document. Then we distill it down to a one-page executive summary, and then we build a pitch deck, right? Business plan's gone. No one does that anymore for the most part, except a few life science businesses. But still, the one-pager survives, and I love it. I mean, it's kind of a written form of your pitch deck, right? Where it's everything Eva said. I love leading with your traction or your team story. And then it's, market, traction, team, problem solution, all that stuff. Like it's almost like a miniature version of your pitch deck in one condensed thing that's easy to skim. So that's it.
And having that concise visual reference, which kind of leads me into our next for you, Nathan. I'm highly visual. I learn by watching. And, when you talked about identifying the right investors and kind of this process that you go through, I'm hoping you can share with our audience today, because I've seen you present before and it's awesome. Just some of these hacks, these little tips that you do. So I'm hoping you can walk us all through your system for kind of mapping investor contacts and how to really research efficiently and effectively.
Yeah. Can I share screen now?
Yes, let's do it.
All right. Can you see my stuff?
We can see it.
All right. So I'm going to skip through most of this, but I mentioned, fundraising is a sales process. That's sort of our framework of how we think about this. And if you think about sales, B2B sales, step one is building a list of targets or leads. And then step two is qualifying that list, making sure you're really identifying the right people to go after. And then, step three is engaging with those leads or prospects. And step four is really driving them all towards a decision, towards a close. So let's focus on that sort of lead gen concept at first. It's all about the funnel, finding the right people. I'm actually going to skip most of this stuff. I know the audience is both startups and maybe some venture funds. This is a little bit more applicable for venture funds, but what we want to do is build that top of the funnel. And I usually tell startups in particular, you need at least a couple hundred names on there. Here's one of these like dichotomies of fundraising. It's a numbers game. You got to talk to a lot of people, but it's also a relationship game. Sometimes people only hear the numbers game and they think, oh, I just got to blast out as many emails as I can. Well, no, it's not just a numbers game. It's also the relationship game. You got to talk to a lot of people because you're going to get rejected most of the time, but you also have to be talking to the right people. So how do we do that? Crunchbase is a good go-to starting point. You can, Crunchbase has been around forever. You can go in and search by different criteria, industry, stuff like that. One way I like to use Crunchbase that's a little bit of a hack is to make a list of several companies that are similar to yours but not directly competitive, plug them into Crunchbase and see who funded them at the relevant stage you're at. So if you're raising a seed round, these guys, you would add them to your CRM or to your spreadsheet, whatever. So that's one thing. I won't make this a product plug, but we do have a database in our platform of about 227,000 investors, and you can search by type of investor. So this is always good to identify. Are you interested in angel investors, high net worth? Are you interested in venture capital? Are you appropriate for venture capital? Are you looking for family offices, right? Thinking about the type of investor you're trying to get in front of. And of course, filtering by industry, find venture firms that are in SaaS, maybe filter further by location or stage. But this is kind of the starting point of any fundraise, is building that target list of, call it 200 or so investors is a good starting point. In addition to Crunchbase and Foundersuite and Fundingstack, there are so many places to find investors, right? This first bullet point here, make sure I'm good on time. These are newsletters you can subscribe to, and basically when startups and venture funds raise capital, they'll announce it in here so you can see who's getting funded and who's investing in them. So it's great to kind of see who's, writing checks. Conferences, I'll come back to that in a second. There's tons of conferences out there. Go in and look at conferences in your space and see who spoke at those conferences. A lot of times investors will build their own brand by getting out there speaking. Quora, TechCrunch, Medium, you guys are all familiar with this. But when you find an investor in Crunchbase or Fundingstack or in one of these newsletters, go follow them on Twitter. And Twitter will often recommend other similar profiles. Same with Medium. Go follow them if they have a Medium blog, because Medium will recommend similar, firms. And then there's lots of great databases out there. So there's tons, right? PitchBook, very expensive, but a lot of good data. Preqin just got acquired by BlackRock. That's kind of wild. Family office list, of course. Shout out. But there's others. LP Match, I haven't played with that, but I'm going to show you two very quick. I'm going really fast. I'm trying to pack in all this stuff, but I'm going to show you two very quick ways to kind of tap your own personal network.
Sweet. I love this.
Yeah, let's see how fast I can do this. But LinkedIn is great for prospecting investors, and you can see my screen, right? Just making sure. Okay, good. Let's say you're a startup, you're raising a seed round, go in here and, search for something like an angel investor. Okay. Now let's go to people. Okay, there's 119,000 results. That's obviously too much to do anything with. So I like to actually, the hack here is second degree connections.
Nice.
And then I might let's go for fun. Eva, I think you're over in UK, but let's go. Yes. Let's do this just for kicks. Okay, so 2,500 results, much, much more manageable. This means I have 2,500 people that call themselves an angel investor. And let's say I was based in London that are in London that I have at least one mutual connection to. But that doesn't mean I'm all of these people are relevant. So I want to open up a bunch of profiles. You can command click or right click. We'll just open 3 really quick here. And then, you can do this in about 20 seconds or less. You skim each one. And what I say is kind of like thumbs up, thumbs down. You're looking for clues that Christopher invests in your type of business. And like for Foundersuite and Fundingstack, we're SaaS, we're FinTech, kind of SMB related. So I'm looking for any clues that Christopher, I'm seeing clues already. So he worked in business planning, M&A startups, corporate finance, so he would at least get what we're doing with Foundersuite, right? So he's definitely interesting. Then I might go down and look at what he's doing now. So he's at Oxford Innovation Finance. I'd probably click through to that, see what that's all about, if that's a fund or something else. And he looks good enough to add to my pipeline, right? It seems like he would get what we're doing. And then I want to add him to my CRM. And then I want to do one more thing here is click this link and see who my mutual connection is, because this is who I'm going to ask for that intro, right? So I know Paul decently well, so I'd probably add Christopher to my pipeline and Paul to my pipeline as the connector. Yeah, so that's kind of the LinkedIn hack there. And then you Command W, move on to the next lady, Samantha Tubb, see what she's all about. You get the process. You can go pretty quick on this. And then one other thing I think is interesting. I'll just do this in like 1 minute, but basically I love tapping your network, tapping your Rolodex of contacts in a thoughtful way to identify leads and prospects. And one thing we did with our CRM here, and you can do this with any CRM. I'm showing you our stuff, but you can do this with basically anything. Is I made a column. I call it Steve B Leads. Steve Bennett is a real person. He's a human. He's a fractional CFO, very well connected. And I invited him in. I said, "Hey, Steve, I'm building out my investor pipeline. I made you a column in my CRM. You know what we do. Could you maybe add a few names from your network into our CRM, and that you would be willing to introduce us to?" And he did. And he added like 10 names. And I repeated this process with 5 or 6 other of my mentors and generated like 50 or 60 well-qualified leads. Yeah. So I think that's all I got here, but hopefully that was under 10 minutes.
That was awesome, Nathan. I mean, the live presentation you do where you go to LinkedIn and you find those, second connections. I learned that from you and it works. I think leveraging our networks and leveraging LinkedIn, like what did we do before LinkedIn? It's just
how did we live before LinkedIn, right?
all the clues. I mean, it really is a treasure hunt, and that information is right there. And I think this like rolls beautifully into how Eva uses a lot of those clues to actually craft like very compelling messaging that actually gets responses.
Danielle, before moving, I would do a disservice. I have to spend 10 seconds on this slide though. Once you built that list, you actually want to remove people from that list. This is the step that so many people skip, and I'll just spend 30 seconds on it. Once you build a list of, call it 200, 300 investors, you want to go through, and I go back to my metaphor of fundraising as a sales process. The best salespeople, the people who are making 500 grand a year as top sales people, don't just chase every lead. They qualify them. They make sure they invest in, they're looking for what they're doing. And you want to do that really carefully with your investors. So basically you want to just start removing people that have invested in a competitor, that don't have a fresh capital. Maybe you really dig into their portfolio. Maybe they're a venture fund that you dig into their portfolio and all their stuff is really Series B. Yeah. That's, anyway, so I just wanted to add that really quick.
I'm glad you added that, because it's all about working smarter, not harder. Don't spin your wheels, don't chase the wrong target. So thank you for adding that in. Awesome. So Eva, I am very excited to see from you. I've tuned into a lot of your workshops and it's just brilliant. I mean, so much goes into the psychology of how you get people to respond. And when we talk about treasure hunt and these clues, I'm excited to let you kind of take it away and really walk us through this research project and how you craft cold email that actually gets opened and responded to.
Absolutely. Thank you, Danielle. Yeah, I basically write emails for a living at this point, because this is what I do for my clients. And specifically for family offices, this is what I was working on earlier this week. And I really enjoyed this one because there's slightly different signals that you can find in here. I was using the family office list to find them. And the first distinction that I noted is, single family offices, they can act faster because it's just one family. So let's say for pre-seed founders or seed founders who do not have that much runway left, they might want to be going ahead with the single family offices. Whereas when it comes to multifamily offices, decision-making can take a little bit longer. So that's something to consider. Now, the tipping point in here is really when they have about 250 million assets under management, because this is when usually they would employ a chief investment officer or a principal, and that is exactly the person that you as a startup want to reach out to, because that will signal that they might have more investment under their belt. I wrote about family offices on my newsletter as well. So for example, the Tsao family from Singapore, their thesis is all about do no harm principle. They will invest in longevity, education, health tech. Once you look, you can find that information. And with the family office considerations, this is the signals that you want to be looking for. They look to preserve their wealth. That's why usually they have balanced portfolios with the sectors that they made money in. They've got their certain values and philosophy, which will guide the strategic investments that they do. So if you go on LinkedIn and if you spot that one of the members of a family office sits on a non-profit board, that might suggest philanthropic angle to it. You look at some of the family offices who chase trophy investments. So if you have a reputable name of a VC on your cap table, that might make the outreach easier. Some of them have the long-term horizon, so they're not bound by the 10 years fund cycles. They can make direct investment, and the frequency and volume will largely depend family to family. So to show you an example, I went on the family office list. I've specified the deal type as venture capital and the funding stage as pre-seed and seed. And for the specific reason of my example here, I decided to go ahead with energy and materials verticals. First name pops up, Reimagine Ventures. So let's take a look at them. You can find on the family offices their entire write-up. So in here we can see that they invest in companies that facilitate the shift towards renewable energy and sustainable solutions. They do direct investments, and they've invested quite recently, just 3-4 months ago. So that's a good sign. They're active. And here I also noted that they invested in this company who are developing clean energy solutions and commercial fusion power. So that's something that, make a mental note of it. Remember it. How I would open the email is we start with a subject line. I said, reimagined focus, B2B SaaS energy storage. Let's assume that you are this company, B2B SaaS energy storage. Using the word reimagined in the subject line is a playbook in itself, because you're actually using a word from their name. So this is what I call lead with them playbook. Reimagined focus could be what you're doing, but if they read it, they might think, oh, they're talking about our focus. You're leading with them. That's also sales 101. Nobody likes to be told in a cold email, are you hiring? I can help you with your hiring solutions. No. We want to be heard something that actually relates to us. I don't know who I'm contacting yet, but that's fine. I can already start the email. I've done my research on reimagined ventures, so take technologies in your portfolio. I think we should speak. So in the first line, you've completely led with them. Then you can go again on the family office list to find more information. So in here, I can see that the firm focuses on identifying and supporting businesses that challenge the status quo and drive innovation. That's exactly what I'm going to use. We're going to say in here, our platform challenges the status quo of grid-scale energy storage. That's the linguistic mirroring playbook. Harvard Business Review, they did a study in which they found that lawyers who linguistically mirrored judges' writing styles more than doubled the chances of winning their case. We're talking using the same vocabulary, similar sentence structure, or when you're pitching face-to-face or over Zoom, even matching the tone of the voice and the speed of how fast you're pacing through the words, which is essential for widespread adoption of commercial fusion power. The data we collect could enhance TA's offerings. The portfolio synergy playbook. You're going to align yourself into synergy with their other portfolio companies. If you help that investor generate better returns on their other portfolio companies, that's great. They're going to want to invest in you. Next, using the family office platform, you can find who to reach out to. In this case here, I found Alec. We go on LinkedIn, and on his LinkedIn, you can see that he was previously a former director of a company that merged with STEM Incorporated, and they created the first pure play smart energy storage company to go public in the US. Make a mental note. We're going to lead with that. We're then going to say, hi, Alec. We now know we're messaging Alec. Your experience from the StarPeak/STEM merger would be invaluable as one of our strategic partners hinted working with us towards a certain level of ARR at which they would work towards a trade sale. I call this the exit potential playbook. You're mapping out that you might exit in the future. It's a very, very attractive position to be in. And if you are in that, map out that exit potential. Next, you can go on the Reimagined Ventures website. You can find Alec, you can find Jennifer, you can find Jack. You can see it's a family office. You can see it's a family leading it. Jack presumably is the son of Alec. We can look him up. And here what I've noted is that Jack is actually the one who helped to expand the firm's private capital portfolio to cover hard science investments. So let's take it as well. We can then say, next quarter, we are launching a hardware component and nods to Jack's investment background. So here, it's the cliffhanger playbook. So you are showcasing something that is just about to happen. Next quarter, we're launching this. So it's a cliffhanger because then you're also opening the door to follow up on that investor in the next quarter and update them on that cliffhanger that you've set in your earlier email. And the second playbook involved in here is the team alignment playbook. The more team members from that VC fund you can align yourself to, the stronger your pitch becomes. that leverages free breakthrough materials. I'd love your take on those we picked. If you ask for money, you're usually going to get advice. But if you ask for advice, you're going to get money. So that's what I utilize in my emails as well. And to finish it off, we're gonna see, family office list. I absolutely love it, by the way, Danielle. It's honestly such a pitch book of family offices. The last thing to finish my email that I found in here is that they strategically invest in forward-thinking businesses. So we can flip that a little bit, and we can finish with, we're speaking to strategically aligned investors that would see our forward-thinking vision scale globally.
Amazing.
That's it.
Oh, it's like, bravo, wow, so many nuggets.
Yeah, if any of the startups want me to craft an email like that for them, feel free to cold email me. That's what I do.
Yes. Your inbox is gonna be blowing up. I mean, that's awesome. There's so much thought in putting yourself in their shoes, which I think so many people make it about themselves, their stats, their achievements. But we have to remember, like, these investors, they're people, and they have an agenda. So if we can put them first, it just flips the script. It's so valuable.
And there's something else that I wanted to add in here. Because a lot of the founders that I'm working with, they would ask me, well, how long does it take to craft an email like that? It seems like you have to research a lot. And look, to me, it can take even up to 1 hour to craft an email like that. But if that 1 hour translates in you raising 3 million, I would say that this is a pretty good return on investment when it comes to that time spent. And I do suggest to the founders that they need to get crystal clear on who falls into your investor category type A, who's type B, and who's type C. In the A category, that's your ideal investor target. That's where you can find anywhere between 3 to 8 or even more strategic lines of alignment. So you've seen how many I found with Alec and with Reimagined Ventures. He goes into that category A. Category B, much less lines. Category C, maybe one or maybe none. Maybe it's just a generic type of investor. So for category A, spend up to 1 hour, personalize the entire email. Category B, semi-personalized. First line, personalized, usually enough. Category C, that's when you can do a little bit more of mass outreach, bulk outreach, carefully as well. That's how I would, do this.
Very, very helpful. And, I think too, you set that precedent. Even if they're not the right investor, it's not the right time. You've established that relationship. And so many times, like, if you do it the right way, they may introduce you to the right one, especially if you provide that context and insight. And so, just really nurturing the relationship side behind it. And I'm curious, maybe I'll ask Nathan, say you craft an outreach like that, and maybe it's not the right time, you get a response, but like, what is the best way you think to keep investors engaged after that first interaction?
Yeah, love it. And I just love everything she just said. It's so on the nose or on point about researching, qualifying your investors. And then, like you always say, I borrowed this from you, Danielle, show me you know me, right? Like, show these investors that you're reaching out to them. Oh, can you hear me?
Yeah, you're
okay. Good.
Yeah.
Show me you know me, like showing these investors, as Eva just demonstrated, that you have a real reason you're reaching out to them specifically. I love that. Okay, so getting to your question, let me go back to screen sharing. So, all right, I've already showed you this. Once you've built this list, I love this outreach stuff. So much of it is getting that intro. We've got a little tool for this. There's my plug on that. But the other way to approach this is, is using what I call the permission email. This is one of my favorite funding hacks, using the permission email plus investor updates as a way to nurture these relationships. Mark Suster, everything I say is almost borrowed from other people I've talked with. He's a venture capitalist at Upfront Ventures. He's got a great quote: investors invest in lines, not dots. Meaning you've got to build a relationship with these investors over a period of time. They've got to get to know you a little bit and see your progress. And so that's where investor updates can be so handy So let me show you a little bit. Now, I want to actually back up just a tiny bit because the permission email, getting the warm intro is always the right way to do it. But there is a bit of a little trick here, which I like to call the permission email. This is another way to outreach to investors. And I think one of the gentlemen said, how do you do this at scale?
Yes. Well, thank you. And I apologize. That question was pulled up earlier. So if we can craft that into what you're showing us is like, how do you do such customized out? There we are. Thank you for the amazing question. So from the audience, how do we implement some of these amazing suggestions at scale? And and what is the process for nurturing those relationships? So teach us, Nathan. Excited.
Teach us. Yes. Well, so this is one of my favorite emails, and hopefully you can see my screen, but it's called the permission email. And you can drop in some personalization tags. Like, I'm the founder of Acme, right? Whatever my company is. We do XYZ. Here's our most exciting thing that we do. You could say something like, I see that venture fund, this is almost similar to what Eva just showed us, invested in portfolio company and is active in industry, right? So you can craft these messages that are just tailored enough, or in Ava's vernacular. Maybe you do this with your tier 2 people. You do your tier 1 spending an hour each time. Your tier 2, maybe you use something that's semi-personalized. But the point of this email is really what we're getting at here. We're not raising money right now, but we will, in Q3 of this year. We send out a 1-page company update talking about our progress. I would love to give you an early look, magic words, early look at what we're building here. May I have your permission to add you to our company update distribution list? So this is this is a personal email, or this is the permission email. It's a cold email. But the beauty of this is you're not asking for their time. Mm-hmm. You're not asking for a meeting. Time is very valuable. You're not asking for their money. All you're asking is if you can share your company updates with them. And this early look or sneak peek is kind of the magic words, because, how do you make money as a VC or investor? You get into the best deals as early as you can, right? And so you're signaling that, hey, you might have something here, and you're going to give them a sneak peek. So why would an investor not say, okay, sure, send me your company updates? So,
yeah. And I'll just add as well that I would say, when it comes to you finding your ideal investor targets that go into this magical category A, I don't think you should do this at scale. I call this the precision outreach. That's where you want to find your top 10 and ultra personalize and really take your time. One of my C-level clients, Damien, I've crafted 8 emails like that for him. He had 100% response rate. All 8 responded to from partners at VC funds. All wanted to see the deck. He's now raised the full 1.5 million that he was raising. So there's 2 schools of thought. There's the mass outreach, and there's also precision outreach. You can combine them too. I'm not asking you to choose between the 2. But once you know which investor goes into which priority category for you, do mass outreach to some, and then choose your best targets carefully and do precision outreach. That's how I've seen most of the founders who raise in weeks. I would ask them, how did you do this? And like, can I take a look at that email that you sent me? Could you show me? And, and they would show me the email. And I was like, I want to know exactly the words you use. I want to know exactly the minute at which you send that email. Because I think there's just so many strategies and playbooks that you can find in there.
So I agree with that. Super hyper personalized for your tier 1, maybe a little bit more mass on tier 2, but all of these should start getting a monthly update from you, in my opinion. This is how to nurture relationships with investors and show them your progress over time. And this is one of my favorite funding hacks. We've had over 100,000 startups on the platform. I've seen this work so many times, so beautifully. So, and people don't do this. And that's the other thing about this is like maybe 1% or 2% of founders send a monthly update. But let me make the sales pitch for this. This is all it is. Let me just skim down. This is how short it is, right? This is not long at all. It's basically one page. And here's what it should contain. A little bit about what you do. What do you guys do? This is going to be pretty much the same section every time. You know, maybe you update a little bit something here from time to time, but the overview is just what do you do, right? Then what happened last month along the lines of product releases, traction, sales, maybe press, maybe even like a key hire or something like that. So what are the good, sexy things that happened last month that include a screenshot of your product, even if your product is super techy or scientific or boring, you know, put something in there showing your product, show your metrics, whatever those are, then talk about what you're doing next month, you know, what's coming down the pipe in terms of product, new partnership deals, whatever it may be. Put in some image of the team. Everyone should have, every update should have a picture of the product and the team, you know, and then that's it. That's all it is. This should not take you more than about 15 minutes. And I tell people, block it off on your calendar, right? Block off like the third Friday of every month, an hour to write your investor update. And then you send this out to investors. And here's why this is such a fun hack is I have seen founders send this out. Like, let's say I'm raising money in September. I'm going to start raising, you know, Q3. If I send this now, March, April, May, June, July, August, they get 6 months of updates, seeing my progress, seeing our wins every month. In the August update up top here, I put in bold, we are kicking off our Series A next month. Let me know if you want early access to our pitch materials. And I have seen, I kid you not, multiple startups that get scooped up by investors before they even go fundraise. So imagine how easy your fundraiser would be if you're having investors say, I love this, I've been following your progress, we're interested in leading the round, before you have to go talk to 200 investors. It's like, yeah, it's such a fun thing. I'm in Marin County in California, and I use it like the real estate metaphor. Houses get snapped up before they even go on market, right? Because you're kind of doing the same thing with your startup by nurturing these relationships. And again, this is so short, right? There are basically 2 text blocks that you have to write. What happened last month? What's happening next month? And then drop in a couple images. So it's such an easy hack, and it can make your fundraise so much faster.
It's awesome. And it builds the brand. And so much of this is just psychology. And I know there's this marketing psychology report that suggests, you know, that people need to see or have 7 to 10 interactions before they really trust and develop brand awareness, which we think of this digital age. I mean, we're just getting bombarded. So I think it's so important that you have that brand awareness, build who you are. And I'm curious, I mean, both Eva and Nathan today, you both really exemplified the importance of LinkedIn. And I think, do you agree that not just these investor updates and this email communication, but also showing up and doing similar things, you know, showing your team, showing your progress on LinkedIn, I think is effective as well.
Yeah. I'm glad you mentioned this, Danielle, because that is basically what an outreach playbook looks like when I build it for my client. It is all of the different steps, multi-channel across different platforms that you should be doing. LinkedIn presence, online presence, it's, let's say, 1 step. Subscribing to their Substack or a Medium newsletter, another step. Reaching out to a team member from their team, another step. Cold email, follow up, 2 more steps. Going to an event where that investor is speaking, another step. So usually, you know, the playbooks that I'm building for my clients would contain anywhere between 8 to 11 different steps.
Wow.
And, you know, some of the steps are mine. For example, if I know the investor and I message them and I tell them, I've just met the most amazing startup with Series A level results at seed stage. Honestly, I'm so excited about them, so excited. Cool, what's their name? Oh, this and this. And then I would tell my client like a day later or 2 days later, send your cold email now.
Yes.
No, that works a charm because subconsciously, it all adds up. And this is what in psychology is called the mere exposure effect. As humans, we are more likely to select something just because of the mere exposure to it. And we might not even know it because, as you said, we live in such an overstimulated world filled with ads and tabs and infinite scrolling feeds that I hate. And you really have to break through that noise. And those ultra personalized emails, standing out is no longer a nice to have. I would say it's a must to have, given of how much competition is out there.
I love that. I feel like there's just been these quotes that each of you have dropped that I want to create. Yeah, just this one pager from today's presentations. This has been awesome. I am looking at our time. We have plenty of time. I make these things live intentionally because we have an amazing network, amazing community here. I know that it's fun to fold people into the conversation. So I think if people here who are joining us live, thank you for being with us. And I'm sure I've learned new things, incredible insights. If you would like to drop any questions in the chat, I'd love to be able to include you. If not, I'll continue asking away because I have more questions. Thank you, Andrew. So Andrew asks, is it customary for seed stage AI companies to get direct investment from family offices? And, I'm happy to take this one if you'd like, or
do it.
Yeah, so I think right now AI is all the rage. We just did a report to look at what percentage of family offices are investing in AI, and we showed almost 50%. The thing is, there's a lot of hype and it requires due diligence. And so when you're working with a seed stage company, I think it really requires that you have a partner who's well-versed in the space. And that's why we do see a lot of family offices, whether collaborating with VCs, whether collaborating with other family offices who are better versed in the sector. But yeah, I don't think it's uncommon. Again, it's about, really oftentimes if you don't have the traction or the track record, they're investing in the person. And so, showing who you are and really creating that connection, why they should believe in you and what you're building. Feel free, Eva or Nathan, if you have anything to add to that.
I think what will happen with AI is what happened with cloud some years ago. When we moved onto the cloud, everyone was talking about it. It's like, we're investing in cloud, like cloud and everything. That's where the money is. And then we eased into it, and cloud now permeates all of the sectors, and it's just the technology that we use. I think the same is going to happen in AI. It's going to be across all sectors. It's going to be widely used by all of the businesses. That probably by 2030, we're going to stop saying that it's an AI-led startup. It will just use AI by default.
Right.
I think it's the new normal. And yes, you should be using it. If you don't, you're putting yourself at a disadvantage compared to everyone else who does. So to answer that specific question, whether a family office would invest, well, depends on your sector and depends on where the family office made their money in, depends on whether there's complementary investments in their portfolio, depends on their likes in terms of verticals and sectors. So I would look for alignment in that.
Mm-hmm. Excellent. Thanks for adding that. There is a question from the chat, but I definitely want to expand too on the use of AI and how we can leverage that for our own outreach and becoming a bit more efficient. And I'm curious, both Eva and Nathan, do you guys use a lot of AI tools to kind of accelerate the research and the crafting of emails? What are your thoughts on it?
I'll start with that. It's interesting because I am 100% a believer in having hyper-personalized emails and all that. But at the same time, we added a generate with ChatGPT integration to our email tool, right? And this is sort of a bit of a dangerous tool, right? Because it can be amazingly powerful, right? And you give it little parameters, how the tone of the email, stuff like that. And and then it will go pull stuff from that person's background and weave it into the email. It's really amazing, but it still feels a little bit like AI generated. And so I always tell funders, use this to kind of help you build the research and the why you're reaching out to them, but edit the hell out of this using your own language so it doesn't look like AI wrote it, right? Because I know when I get an email from someone trying to pitch me something that's AI written, it's terrible. And just one more thought on the AI. I mean, so like we're integrating AI into our platform to help you write those emails. We're working on something like a virtual analyst, I call it, that's like looking at the investors you're getting traction with and recommending others. There's a ton of opportunity to apply AI to fundraising that we're trying to figure out and building as we speak. So it's the future, obviously, but you also can't rely on it too much. You should not be sending out AI written emails.
Yeah.
Full stop.
I very much like it for and if you're trying to figure out for investor category A, the AI is the perfect spot to do that. And like I've opened my prompts and I'm happy to read out one of my expert master prompts that I'm using, because whenever you go on that investor's website and you go into their portfolio, copy the URL link to their portfolio, and that's literally my prompt. Tapping into the full extent of your deep research, deep analysis, and critical thinking, I'll give you a name of a potential investor. Research them in depth, analyzing their website and online presence, as well as by analyzing their recent investments in the last 12 months to spot any patterns and deduce insights on that investor's investment preferences. Discuss whether they are a good potential investor target for my startup, pitch deck attached. Why yes or why not? Be critical. Utilize deep research to discuss with critical, logical, and well-informed verdict on how much of a fit they are to me and why.
Really?
The moment I put that in, it spans out the biggest discursive essay that I used to write when I was doing international baccalaureate in school.
That is
Yes.
awesome prompting right there. It is amazing. It's like this powerful tool, but it's how you prompt it and then like how you fine tune it. So I thank you for sharing that. That's saves you a tremendous amount of time. And like we talked about earlier, it's about finding the right fit. So AI
especially when the investor's website is not that extensive. So there's not that much information to go off at. That analyzes their investment history and deduces the patterns. That's a game changer.
Amazing. There was a question up earlier. I apologize. I just got my own question about AI there. But how would you navigate a startup seeking funding from Europe and America-based investors, yet based in South Africa? Yeah, I'm sure you both have insights on this. I have thoughts too. But basically, I think that target geography plays a really important role in knowing their appetite for investing in those areas. But feel free, Nathan or Eva, jump in if you have something.
I'd also add, for example, if that startup can find, if the person's based in South Africa, seeking from Europe, have a look if in Europe there's any corporation or a company that could acquire you in the future. And then you can use, the exit potential playbook to map that out to those European investors. That's why you're targeting this category. That's where your exit could take place. Or, if you're trying America, try to align your go-to-market strategy to America, the GTM playbook, as I call it. So go into your pitch deck, alter your go-to-market slide. America is now the first target market that you are expanding to because you're pitching to that investor. And you can say to them, we're seeking the right strategic fit investor who will see us internationalize and cross over to the American market. That's why we're seeking someone connected with the right expertise based in the geography in which you are based, and hence my outreach. So there's a number of different strategies of how you can align.
Yeah, and I would add you should use a version of Ava's prompt there to see if they even invest in anything other than U.S. startups, because there's no sense wasting time if they literally only invest in Silicon Valley startups, and you're based in South Africa. What's the point, right? It's interesting though. I've been raising money for a couple decades, and like investors are much more willing to take a look at startups based outside their geographical region than they were even a few years ago. One little strategy now. There's multiple questions we could ask, like, are you going to establish a U.S. headquarters, or are you going to stay based in Africa? A lot of startups I've seen maybe come from Estonia, for example. They still have all the engineers and some of the sales and marketing in Estonia, but they have a headquarters in a WeWork in San Francisco, right? And the CEO will come over for 2 weeks out of every month, setting up a bunch of meetings, and they're fundraising for a Delaware C Corp that just happens to be 80% Estonian employees, whatever, so there's different ways to frame that. I don't know if that applies to your situation or not, but there's different hacks around that you can kind of make yourself look and feel a bit more like a European or US company, but still be based wherever you're at for very real cost advantages, right? So.
Awesome. Thank you, Nathan. I think we have David is asking if Eva's willing to copy and paste the prompt in the chat. I don't know if we put things in the chat here, if they will, but this actually leads beautifully into where people can go to learn more about your work and connect with you. And if, like Eva, you already told us people can cold email you. So David, Eva's email is up on the screen, but I'll let you guys each speak for yourself where people can find you, connect with you, follow your work, and learn more.
I'll start. Nathan at foundersuite.com, super easy. And LinkedIn, Nathan Beckord, Beckord. I get tons of invites, so maybe mention you. We connected on this show, and I'll be happy to connect with you and chat on LinkedIn. Those are my two best.
Amazing. Thanks, Nathan.
Yeah, same for me. So if you want to work with me, absolutely, send me an email. And if you want to connect, I post quite a lot on LinkedIn as well. If you type into search bar Eva Fundraising Playbooks, I will come up. If you know my Polish surname, congratulations. And I will come up with that as well. And yeah, I do post pretty much everything that I do in terms of events, webinars, and content and learnings on my feed. And actually, I think in one of the most recent posts, you will find that investor categorization framework, the A, B, C categories. So yeah, happy to connect.
Yes, for John asking if there will be a recording of the session, there will. And because this was kind of a live stream, it's not that I have everyone's emails on registration, but what we'll be sure to do, I will make sure Eva and Nathan both have a copy, myself as well. I'll post a recording from my LinkedIn, so anyone who didn't catch the beginning can tune in, because it was just an action-packed session. I can't thank either of you enough, Nathan, Eva. You guys are tremendous at really educating people and sharing your wisdom, so I really appreciate you joining us today. I will make sure I'll follow up. I'll share the recording. And for anyone interested in learning more about Family Office List, there is a promo code for 20% off. And yeah, I appreciate everyone being here today. Look forward to our next session.
Thanks so much for having me. They went so fast. I can't believe that was an hour.
Yeah.
You're having fun.
All right.
Amazing. Guys, enjoy the rest of the day. Until next time.
You too. Thanks, Danielle.
Bye. Thanks.
Bye.